This is the teacher Haris Bhatt, and you are seeing my YouTube channel and accounting with Haris. Today we are going to solve the question of absorption and marginal costing, both from AS accounting, right? And the paper is obviously question 4 is there, obviously, and the paper is basically February, March 24, 22. So question number 4, February, March 24, 22. Obviously, 22 variant is the only variant in February, March, and we are going to solve the question number 4, which includes both absorption and marginal costing. If I talk with you regarding the last 1 year, so you can perceive that in the last 1 year, almost 90% of the fourth question is from both topics, absorption and margin, right? So, but still I am going with only absorption this year. So that is the reason that I want you to do some part of marginal also, but that is not going to be limiting factor. So the guess I have uploaded is wrong, but that is not for my students. So let it go. The question is of a marginal costing is from CVP analysis, and CVP analysis we will do today. Last class में आपके आज की morning. Okay, CVP analysis we will do today, and along with absorption costing. So let's see. K Limited uses absorption costing at one of its factories. The product manufactured in this factory goes through two production departments, cutting and finishing. The budget information was available for the ended 31st December 2023. Overhead absorption rates are given. 3.62 for cutting department, 2.34 for finishing department. It means apportionment, reapportionment has been done, and overhead absorption rate is calculated through budgeted overhead cost divided by budgeted hours. So it is done. And labor hours are given, and machine hours are also given. So it is clearly understood that for machine, for cutting department, we will be using machine hours, and for a finishing department, we will be using labor hours, because labor is more consumed in finishing department and less in the cutting department. Let's, acha, OAR to diya hai, so there is no reason to talk about that either. Labor hours are high on the higher side, or machine hours are on the higher side. A customer placed an order for 250 units. The following budgeted information is available about the production of 1 unit. This question basically wants us to prepare the price to be quoted to the customer. That is also known as job order costing. The order has been placed, and the data is given for 1 unit. Per unit, direct material 17.28, direct labor cutting and finishing are given separately, and machine hours cutting department is given 2.2 hours, and finishing department is 1.4 hours. So it means that both departments are using the hours, machine hours, which is for cutting 2.2 and finishing 1.4. Selling price are set to achieve a profit margin of 40%. Prepare a statement to show the total selling price for the customer order. Remember, he's asking us to prepare the total selling price, right? Not the per unit selling price, the total selling price. Then actual production hours are also given, labor hours and machine hours. Total actual overheads were the same as budgeted overheads. Calculate the over under absorption for each production department for the ended 31st December 2023. Okay. Let's solve this question. We need to find the total cost first. We need to find the total cost first. Let's see. So, selling price to be quoted. I will use the dollar sign, not the two part for the two sides. First, we'll find the total cost. For that, I have to find the direct material cost. I will go per unit, on per unit basis. Then I will multiply the total cost with the units actually. And the units consumed, units produced and sold are given in the question. That is how much? Units are 250 units. So let's see. The direct material is given, that is 17.28. I will write here. In the outer column directly, 17.28. Okay. Now then, direct labor. And direct labor is basically for both departments, for cutting and for machining. So cutting and machining. Let's see. The cost is given. Cutting department 1.2 hours at the rate of 11.5 and finishing 3.1 hours at the rate of 11.5. So we can multiply it, please. Give me the answer. So 1.2 into 3.5. दूसरा है आपका, let me see, 1.2 into 11.5. 1.2 into 11.5. And next is 3.1 into 11.5. 3.1, sorry. 3.1 into 11.5. So what is the amount? 13.8 and
35.65.
95.6.
35, sir, 35.
35.65. And the total labor cost we will do by adding both of them, 49.45. Okay. So this is going to be 49.45. Now I will write the answer is going to be the direct production cost. You can say prime cost for it. Just wanted to make you sure about the name of that particular cost. That's why I'm writing it. So direct production cost, or you can write prime cost. So what is the answer? By adding both,
66.73.
66.73. Now I will add production overheads. I will add production overheads, and that is again for the both department, cutting and machining. Let's see. Let's talk about the production overheads. Production overheads, he said that the cutting department, 2.2 hours, but the rate we are going to use for the cutting department is 3.62. I will write here 2.2 hours. Just a minute. 2.2 into 3.62. What is the amount?
7.964. So round off करके 8 कर दें.
964 is fine, no problem. 7.964 इतना round out नहीं कर सकते बेटा. Sir, why you use that? Listen, cutting department machine hours is 2.2 and the rate is given, overhead absorption rate for cutting department is given 3.62. So it means that the machine hours are used for the cutting department. Why? Because machine hours are higher, right? In cutting department in comparison to finishing department. Okay. So we are talking about the machine hours. And secondly, if we talk about the labor and machine hours, so we see that labor hours are less in cutting department and machine hours are high. इसका मतलब machine hours is basically you consuming more machine capital intensive department because labor is consumed less than the machines. So 22,900 hours are given, but we are not going to use that. 2.2 hours for the cutting department, machine hours 2.2 into 3.62. So what is the amount? 7.964. Now for the machining, for the finishing department. Okay. So I've used the wrong name actually. Let me rub it so that we can use the right name. Sorry. This is finishing it. Finishing. Okay. You can consider that in finishing department, normally labor is consumed to record the overhead cost. Because finishing may, normally we don't use machines to that extent. So labor hours are consumed. So the overhead will be charged in finishing department, not according to 1.4, wrong, according to 3.1. So 3.1 multiplied by 2.34. सर ये तो समझ ही नहीं आई. देखिए बेटा, आपको ये लग रहा है कि शायद कटिंग डिपार्टमेंट में मशीन आवर यूज हो रहे हैं क्योंकि मशीन का ज्यादा काम करती है और फिनिशिंग डिपार्टमेंट में अगर आप यूज करें तो उसमें भी मशीन ज्यादा काम करती है. नहीं, उसमें लेबर ज्यादा काम. उसका मतलब है कटिंग डिपार्टमेंट इज basically capital intensive or finishing department is labor intensive because labor is more working in comparison to machines in finishing department. So this is how we will do that. So labor hours are 8,400. Oh, sorry, not 8,400. The finishing department labor hours consumed on each unit is 3.1 and the overhead rate per hour 3.1 multiplied by OR in labor department is 2.34 per labor hour, 2.34. So multiply it, how much it is going to be?
7.254.
7.254. So now you will add this up and you will get the overhead cost. Overhead cost per unit, total overhead cost per unit.
15.218.
15.218. And now the direct production cost plus overhead cost, you will get the total cost. 81.948. Okay. You can also write it down like this, that in total cost, maybe there is selling and admin cost which needs to be added. You will add that. But here it is not given in the question. So we'll add profit in total cost. And profit is given to achieve, selling price are set to achieve a profit margin of 40%. Margin is always calculated on selling price. Margin is always on selling price. But we have been given cost. So we have to convert the margin into markup. So 81 point, which is the cost, 948 multiplied by percentage over 100 minus percentage, 40 over 100 minus 40, 40 which is 40 over 60. So multiply it with 40 over 60, you will get the profit margin per unit.
54.632.
54.632. You will add this up in the total cost and you will find the selling price per unit. You can find the selling price per unit. Yeah. What is this?
136.58.
136.58. Now we will multiply this selling price per unit with the units. Units are 250. 34,000.
34145.
34145. So that is going to be the selling price to be quoted to the customer. Rather, I will write total price to be quoted. Because this is the total price, total sales price. Okay. So we are done with that now. Let's move on to the next part. Next part
So ये
states.
revenue निकाला ना यानी.
So revenue है बेटा. Actual production hours for the year were as follows. And total actual overheads were the same as budget overhead. Calculate the over under absorption. So let me calculate the over and under absorption. So I will write actual overheads first. And I will compare it with the absorbed overhead cost. Absorbed overhead cost will be calculated through the formula, which is actual hours into OAR. Right? So what is the actual overhead cost? He has clearly stated that the actual overhead cost is the same as budgeted. So actual overhead cost, total actual overheads were the same as budgeted overheads. So let's see that what is the amount of budgeted overheads. Is it given in the question? No, it is not given in the question, but we can calculate that. What is the budgeted overheads amount? We can calculate that because absorption rate is given and the hours have been given. These are the budgeted hours. The following budgeted information was available for them. So we can calculate the budgeted overhead cost, which is the actual overhead cost. Same 22,900 for machining department, 22,900 into 3.62. 22,900 are budgeted machine hours into OAR calculated through machine hours.
3.62.
82898. Okay. Now the finishing department budgeted overhead cost is budgeted labor hours, which is 8,400 into 2.34. That is 19,656. So the budgeted overhead cost is the same as actual overhead cost, which is given in the question. So we will use that. This is the new point. You can say like that. Never come in the paper before. So I can write the dollar sign here and the dollar sign here. So actual overheads are for machining department, it is going to be 882,898, and for finishing it is 19656. Now I will compare these two actual overheads with the absorbed overhead cost to find under or over absorption of overheads, right? So let's see. ये हमारा कौन सा है बेटा? ये है जी मशीनिंग, ये हमारा कौन सा है जी? ये है जी finishing. Okay. So actual hours into OAR. So let's talk about machining first. Actual hours for machine hours. Actual hours for machining department, sorry, is how much? 24,300. Here it is given 24,300, and the rate OAR per machine hour is the same 3.62. So you will multiply it with 24,300 into 3.62, 87966. Now you can take the difference, and this will come over absorbed. Yes, how much? 5068. Next, again for finishing, we'll calculate. That is actual hours into OAR, and actual hours are 7,900 into OAR. So I will write here 7,900 actual hours. Labor hours we'll use for finishing, and OAR is 2.334 for the finishing department. So 7,900 actual labor hours into OAR calculated for finishing department through labor hours, 18,486. Now we will take the difference. That is going to be under absorbed for the, yes, 1170. So we are done with that. 1170 is the under absorption of overheads. So we are done with that. Over absorbed and under absorption. You can say like that also. It means that absorbed overhead cost is more than actual overhead cost in machining department, and absorbed overhead cost is less than actual overhead cost in finishing department. So now let's move on to the next part of the question. That is for the marginal costing. K Limited uses marginal costing at another factory where a single type of product is made. The following budget information is available. Selling price is given 42. Direct material is also given per unit 12. And let labor 1.5 hours per unit 18. Other variable cost 3. 12 plus 18 30. 30 plus 3 33. So 42 minus 33. You will get the contribution per unit, which is 9. Fixed cost per month is 38,500. Calculate both the total monthly contribution and the total monthly profit currently being made in this factory. So let's see. Total contribution is going to be 9920 units multiplied by per unit contribution. So what is going to be the total contribution? 9920. This is 9920 into 9920 into 9. Yeah.
89280.
Into 9. That is 89280. Next is going to be less fixed cost, and that is going to be 38,500, because fixed cost does not change with the change in the volume of production, though it is not the part over here. So we'll get the profit. What is the monthly profit?
50780.
50780 is the profit for the year. So we are done with that. If you have any problem, you can ask me any question if there is any till here. So we'll move forward now. You can ask any question if you want to. So additional information is this. The director hope to increase demand by changing the selling price. They are considering the following two options. Remember this, that we are getting a very healthy profit currently. 50,000 profit we are getting around, right? But the director hope to increase demand. Why? Because the units sold are not on the higher side. They are 9920. They want to increase the demand of the product so that we can make more profit. Option A, reduce the selling price per unit by 5%. So let's see. Let's change the data. Selling price per unit currently is 42, right? Into 5%. How much it is going to be?
2.1.
So with 2.1, the selling price is decreased by 2.1, 42 minus 2.1. So the new selling price is going to be 39.9, right? Okay. Now increase production by 4,000 units on the current production level. So current production level is 9920 plus 4,000. So that is 13,920 is the current production level. Now, a commission of 0.25 per unit will be paid. We have to pay commission of 0.25. That is known as variable selling expense. It is not fixed. It is variable. Why? Sir, why? Because it is increased and decreased because of the change in the units. If you are selling more units, commission will increase. If you are selling less unit, commission will decrease. So it is a variable cost, but per unit commission is the same. That is why that is a variable cost. Overtime will be required on all unit produced over 12,400 units and is paid at a premium of 25%. You have to pay a premium of 25% on the overtime, right? So let's calculate 13,920 minus 12,400. What is the units which have been sold above 12,400? 1520. And on that, you have to pay direct labor, extra direct labor of 25%. So there is an increase in direct labor. So let's see what is the amount of direct labor. That is 18. So 18 into 25%, we'll add that up, 4.5. So the new direct labor for the extra units is going to be 22.5. But this is not for the all units. 12,400 units is supposed to be paid at the rate of 18 for direct labor. But the above units of 1520, they will be paid 25% more, which is 1520 into 22.5. Cancel the current advertising campaign costing 8,000 a month. So what will happen? The advertising campaign fixed cost is going to decrease by 8,000. Then the option B is there. I will not study option B. I will go for the prepare the marginal cost statement to show the monthly forecast profit rounded to nearest dollar for each option. So let's calculate that. For option 1, I'm going to calculate. इसको हटा देना, इसकी तो जरूरत नहीं है हमें. So let's calculate option 1. Option 1 है ये था. A, okay. So let's go for the sales. Sales is going 13,920 multiplied by selling price is going to be 39.9. What is the amount of sales? 555,408. And you have to round it if there is going to be any figures in the points. Less variable cost. Variable cost will include direct material, direct labor. Let's see. Direct material will be the same. There is no change in direct material because nothing has been given in option A. We are talking about option A. So direct material, will be 12. So direct material is going to be 13,920 into 12. How much?
167040.
167040. Then again for direct labor, for 12,400 units, the direct labor is 18 per unit. How much? 12,400 units, the direct labor is 18 per unit. 223,200. But for the above unit, which we have sold, 13,920 units have been sold. So above units are 1520. For that, the direct labor is 22.5 because it is 25% more than the direct labor. So that is 34,200. Now we will write the variable overhead. Let's see. I think other variable cost or other variable cost. So I will change it, not overhead. That is going to be the other variable cost. So other variable cost is going to be how much? That will be per unit is 3. So 13,920. If you can multiply with 3, what is the amount? 41,760. And then comes the selling expense. I can add the sales commission in other variable cost also, but I can write it separately also. So sales commission is going to be how much? That is 0.25 per unit. 13,920 into 0.25. It is also variable cost. So that is going to be 3480. Go for the total of all variable cost. We will subtract all variable cost from the sales by calculating the total variable cost. And when we subtract it from sales, we will get the contribution. And then I will subtract the fixed cost to find the profit for the year. So let's calculate the variable cost, total variable cost.
469680.
469680. So the contribution 85,728. Okay, less fixed cost. Fixed cost, he said that fixed cost has decreased by 8,000. It is in the option A. This fixed cost. Cancel the current advertising campaign costing 8,000 a month. Advertising campaign is a fixed cost, right? Because every month we are used to pay advertisement for 8,000. So 38,500 is the advertisement cost minus 8,000. So that will become 30,500. And we'll subtract it. We'll have the profit for the year.
56228.
56228. So it means that the profit has been increased from 50,780 to 5622.
Sir, 55228.
Okay, 55228. So it is increased by 5,000 almost, right? In option A. Now let's discuss about the option B, because he wanted us to find the profit for the year for option B also in the same manner. And option B has a separate data. You can feel like that. You can assume like that option B is a different question, separate question. Option B is a different question, separate question. Then you'll find it easy to understand both the parts. So let's do that. और ये मैं बता दूंगा ना, ऑप्शन ए वाला जो मैंने चेंज किया वो मिटा दूंगा, बिकॉज इट विल मेक यू इजी. ओके, समझ लो ऑप्शन ए तो खत्म हो गया ना. चेंज जो भी आएगा ऑप्शन बी के अंदर, दैट इज ऑन द ओरिजिनल अमाउंट्स, not according to these changes which has come in option A. Reduce the selling price to 41, increase production by 10% on the current production. So the current production is how much? I don't know. Let me see. 9920. 9920 was the current production level, and that has now increased by 10%. So plus 992 is equal to 10912. Okay. Invest in more up-to-date machinery at a cost of 1,80,000. So this is a non-current asset. Increase in machinery is a non-current asset. It had nothing to do with the income statement or a marginal cost statement. Only the depreciation will be charged. So machine is depreciated at the rate of 25% per annum on cost, and we need to calculate monthly profit. So I am going to calculate the depreciation on monthly basis, 1,80,000 into 25% into 1/12. Because I need to find the depreciation per month, right, to solve the question.
3750.
Okay, it is proposed to partly finance the purchase of new machinery by borrowing 1,50,000 at 8% per annum interest. So it means that 30,000 we have paid in cash and 1,50,000 we have basically borrowed. We have taken a bank loan, and on that bank loan we have to pay 8% interest for that. But that interest which is given at 8%, that is per annum for 12 months. We have to pay interest only for 1 month because we are preparing the marginal cost statement for 1 month. So the expense which has been increased for a particular month will be only 1 month. So the fixed cost will increase by 1,000 because of the interest expense and 3,750 because of the depreciation. As a result of improvement to machinery, the time each worker takes to produce 1 unit will be reduced by 8%, and a higher quality product can be made. Even the workers are reduced, the time taken is reduced, but still we are able to produce higher quality product because of the machine is up to date, right? That is the reason behind. And we have reduced the selling price to 41, and that has increased the production level also. So let's talk about the reduce the time taken for producing 1 unit. The time to take 1 unit is 1.5 hours, right? At the rate of 18. So it means now the time taken has been reduced by 1.5. How much? 8%. So let's calculate 8% of 1.5. 0.12. Now you will calculate 1.5 minus 0.12 because that time has reduced. 1.38. Now we are taking 1.38 hours and the rate per hour is, you have to calculate 18 divided by 1.5. What is the rate per hour? $12 per hour we were paying for each hour to our worker. So 12 per hour is the same, but now the hours per unit which has been taken to produce 1 unit has been gone down from 1.5 to 1.38 into 12. So what is the direct labor cost now?
180,702.72.
No. 1.38 into 12. Galat. Bilkul galat. It means that what I am doing, you're not doing that. Why you are going like that? I mean, why you are taking
16.56. 16.56.
Please don't take a stance which I have not asked you to follow. 16.56 is now going to be the direct labor. Now I can prepare the marginal cost statement again. So the sales is going to be how much? The units are now 10912 multiplied by, there is selling price is 41. So what is the amount of sales? Selling price has been reduced to 41. 447,392 less variable cost. That will include direct material. So direct material is going to be 10. There is no change in direct material. So 10912 multiplied by 12. That is the cost of direct material, sorry. 130,944. Direct labor is going to be 10912. Units are same, but the direct labor cost per unit is not 18 for separate units and 22.5 for separate units. Rather, it is a single rate which has been used, 16.56, because the rate per hour is the same. Only the hour consumed has gone down per unit. So the amount is 180,703. Okay. Now the other variable cost, that will also not change. So 10912 multiplied by 3. 32,736. Okay. There is no change in sales commission. There is no sales commission in this question. So I will not charge any sales commission. I will go with the total of the variable cost. And then I will find the contribution per unit. 344,383 minus कर दें, you will get the contribution. 103,009 less fixed cost which is already there, 38,500. There are two fixed costs which are increasing, that is the interest cost and that is going to be the depreciation. So please add them up. Interest cost we have calculated, that is 1,000, and the depreciation is 3,750, already calculated and shown to you in the question. 43,250 subtracted from contribution, you will get the profit for the year 59,759. So the profit for the year in option B is the highest one. So we'll go for the option B, but we are taking a bank loan for that. It has to be repaid, obviously. And you know that repayment is not easy all the time, right? But we are having a higher profit from option A and